stories. I've been in Italy. I've been uh, in Hawaii. Was on a business trip in between in Utah. So just been all over the place. This is my first live in like over a month. Want to jump on here. I'm on Instagram Live and also on YouTube Live. So I want to jump on here and just answer some questions, give you guys some value. I have a call in like 45 minutes. So I figure until then, might as well jump on here and see if I can give you guys value, answer questions for you. So what do you guys have? What can I answer in terms of questions? Let's see. Good morning from Chicago. Almost got tricked by the hacker account. So yeah, guys, if you see an account on Instagram that's asking you about crypto or day trading, that is not me. That is someone pretending to be me, trying to scam people. So please report those people. I feel so horrible that they're actually scamming people, thinking it's me. So please report those people right away. I only have this one account. I do not have any others. So what questions do you guys have about infinite banking? Again, we are on YouTube Live here on this camera. On my phone here, we are on Instagram Live. Instagram, we have more people right now. YouTube, it looks like we only have 3. So my YouTube channel is not that big right now, so that makes sense. But what questions do you have? What can I answer? Looks like Michelle on YouTube, she asked, had my medical exam Wednesday for my first policy. Do you always have to have one for each new policy I want to open up afterwards? How long does it usually take to get approved? So that is a great question. So the way that works, guys, is if you have a policy, or I'm sorry, if you have an exam done for a policy, you can use that same exam for additional policies if the policy is done within 12 months of the exam. So let's say I have an exam done on me today, a health exam, and then I want to get a new policy 6 months from now. I can use that same exam. I don't have to get a new one. If I want to get a new policy 10 months from now, 11 months from now, I can use the same exact exam. I don't have to get a new one. You have to get a new one when the new policy is outside of 12 months. So there's that question answered for you, Michelle. And then as far as how long it takes, so if you get an exam done today, it generally takes about 3 weeks from exam to get approved, because you got to go through underwriting. The insurance company has to check your background. They have to check your driving record. They have to check everything to make sure you're not a risky investment for them. So hopefully that makes sense. About 3 weeks, and you can reuse the exam within 12 months. Perfect. So that answered the question. Oh, Dexter, my boy Dexter's on here. We got Drew Hitchcock on. Let's see, what questions do we have on Instagram? So Caesar asked, how does it work? So infinite banking, guys, the way it works, the simplest way for me to put it is you're just mimicking the bank. So think about what a bank does. A bank takes in deposits. So you put your money in a regular bank account, Chase, Wells Fargo, you name it. What they do is they pay you to hold your money. So they pay you interest to control your money. It's very little, but they still pay you something to have control of your money. And then what the bank does is they take your money and they lend it out to other people. Those people pay the bank back with interest. So they're just keeping the difference between what they pay you and what they make off of your money. So infinite banking is the exact same thing. You're just taking your money, instead of giving it to the bank, You're taking your money and you're putting it into a specially designed whole life insurance policy. That policy, you control it. So now, again, with the bank, you put your money in the bank, they control it. All you're doing is you're putting your money into a policy. Now you control it. The policy is guaranteed to grow, so it'll never stop growing. You get guaranteed compound interest that's tax-free. And then what you do is you just mimic the bank. Think about what the bank does. The bank takes our money and they lend it out, but they have to pay us in order to do it. So it's the same thing with a policy. You put your money in the policy and then you borrow from the insurance company. So you have to pay the insurance company in order to control their money, just like the bank does. The bank pays you to control your money. So you're just doing the same thing. Dropped you on Instagram. You're just paying the insurance company interest to control their money, and then you just go make more with it and you keep the spread. It's the same thing as the bank does. So your money is in the policy, guaranteed to grow. You borrow against it, so it's still going to grow and compound because you're not using it. You're using the insurance company's money. So you're borrowing their money. It's 5% interest. So you're controlling their money for 5%. You just take that money and go make more than 5%. So if you make 10% by lending it on a real estate deal, let's say, this is something I do. If you make 10% and you paid 5 to do it, you just keep the difference. You made 5%, but your money is still compounding and growing in the policy at the same time. So if it grows at 6% over here and you go make 10, you made 16%, but it only costs you 5% to do it. So you're just mimicking the bank. You're using borrowed money to go make more, and your money is the collateral. That's how you get the policy loan, is you just have collateral by putting money in your policy. So that's kind of a high level view of how infinite banking works, guys. Hopefully that makes sense. All right, so Drew Hitchcock says, how much cash would you need to put into a policy in order for the insurance company to require income investigation? Great question. So it's really case by case. I mean, at the end of the day, the insurance company wants to make sure that you can afford what you're putting in, right? So 9 times out of 10, they're gonna ask questions. The more money you're putting into a policy, the more they're gonna dig, really. So if you're starting a policy for, let's say, $1,000 a month, so $12,000 a year, but on your application you state that you make $200,000 a year, they're not going to dig much, because if you make $200,000, affording $12,000 isn't a big deal. If, let's say though, you say on your application you make $200,000, but you're trying to get a policy for $100,000 a year, they're going to do some digging because they want to make sure that you can afford to keep putting that money into the policy. So great question, Drew. It's really case by case. And that's why policies take a little bit of time to get approved, because the insurance company has to really dig into some cases and just make sure that they're not risking anything. Let's see. So, any special paperwork needed to transfer funds from bank account for a dump in I should be aware of? So Michelle asked, is there any special paperwork needed to transfer money from a bank account to a policy for a dump in? And just so you guys know, a dump in, what that is you're just dumping in an excess amount of money into a policy to turbocharge your cash value. So you could have, let's say, premium of $10,000 a year, but you dump in an extra 80,000 a year right at the start. Reason you'd want to do that is because the longer you give money to grow, the bigger it gets. So I'm 37. If I dumped money in today, it would have longer to grow than if I took that big amount and chopped it up and put it in over several years. So dumping money in is a really good thing. So to answer your question, Michelle, our team, we will send you, it's called a pre-authorization form. So you're just going to fill out where you want that dump in to come from, what bank account. So routing number and account number, and then that money will go, we'll send that to the insurance company, and the insurance company will then use that to get the funds out. So it's an electronic funds transfer, and that authorization form just gives them authorization to do it that way. So you'll get that from the team once you're all approved. Let's see. Dexter said, if I'm a president of an LLC or corp and I have a VP, I think you just misspelled that. Can I put a policy on them even if we are not related, but we are business partners? Dexter, great question. Yes, you can do that. So that would be using a corporate owned policy. So you could do it that way. It'd be a key, like a key person employee. So just so you guys know, everyone watching, you can do a policy on yourself, obviously. So you put money in and you're the insured person. So if you die, your family gets the death benefit. Obviously, you can do that. However, you'll get to a point eventually where they won't approve you for any more death benefit. So what you have to do if you want to start more policies is you have to start insuring other people. So you can insure kids, you can insure spouses, you can insure business partners, you can insure family members like parents, nephews and nieces. So you can do all that with a business partner. It makes a ton of sense. It's basically, it has to be anybody that you have a vested interest in living, basically someone you want to live for a long time. Like my daughter, I have 3 policies on her. I want my daughter to live a very long time. So the insurance companies know that. I have 3 policies on my wife. I want my wife to live for a long time. If I had a business partner that's essential to my business, I want that person to live for a long time. So you can get a policy on anyone like that. You can't just go off the street and some Joe Schmo get a policy on them, because if you don't really know them and you don't have any vested interest in them, the insurance company is going to think, well, they'll just have somebody off this person to get the death benefit. So that's kind of the reasoning behind it. But to answer your question, yes, you can definitely do it. All right. So that looks like all the questions for now on YouTube. Let's see what we have on IG. All right. So questions. I'm not seeing any questions yet. That's that one I answered. Can you explain the first steps of infinite banking? So Ethan Schwartz asked, what are the first steps of infinite banking? The first steps, Ethan, are really just funding a policy. You have to put money into a policy in order to be able to use it. So all you're doing is you're putting money into a place that's guaranteed to grow, and then you borrow against that money. So the money just keeps growing because you're not borrowing it, you're borrowing against it. And since it's guaranteed to grow, you're always going to be able to borrow more and more and more and more. So really the first step is just putting money in. The more you put in, the more you can use. The more you put in, the bigger it gets, because the longer it has to grow. So that's the first step, is putting money into a policy. Once you understand how they work, you're going to want to put all of your money into policies. I literally have 9 policies. And the reason why is because I put all my money into them. You can only put so much into one. So if I put like the max into the one, I can't put more. If I put more, it gets taxed. So I have to start another one in order to be able to put more money into policies. So that's the first step, man, just to start putting money in. If you guys really want to know how this works, there is a in-depth video in my bio. If you're on YouTube, it's on the banner, bottom right-hand side of the banner. Click on that. It's an in-depth video of how this all works with pictures and all that. If you're on Instagram, it's in my bio. If you click on it, it says Infinite Banking, and just register for the free video. And then you can actually jump on a call with us after you watch the video if you have more questions. All right, looking for more questions from you guys. Do you teach any crypto or real estate lessons? I do not teach crypto, guys. If you see anything from me about crypto, it is not me. It's a fake account acting like me. Please report those people. I do not teach crypto. I don't really teach real estate either, because real estate is one of those things where there's so many different ways to do it. And right now, it's really risky. So I'm not investing a lot into real estate. I've got rental properties, so I have Airbnbs. And right now, what I do is I'm not actively looking for more real estate deals unless it's a slam dunk. If it's a slam dunk, I'll take it down. But what I'm doing right now is I'm lending money. So guys, I lend money from my policy on real estate deals. So I'll actually be the bank on real estate deals, where I'm actually in a lien position. So if the investor that's borrowing my money for their deal, if they don't make their payments, I can take the house because I'm in first lien position. And I'm sure you guys have seen me like post about that. It's called Private Money Club. So I'm in the Private Money Club, and I can just look through deals, and whichever one I want to fund, I can fund that deal and make interest from that money. I can also get money for deals on Private Money Club. So if you guys want to get into that, shoot me a direct message and I can get you a link so you could get started on it. It's the Private Money Club. I'm waiting for the insurance to reach to me. How long does it take? Diesel, if you could ask that question again, I'm not really sure what you're meaning. I'm waiting for the insurance to reach to me. Doesn't really make sense. So did you already speak with someone on my team? Have you done an exam? Like, just elaborate so I can answer that question better for you. How do I take advantage of my life insurance at work? That is, you can't do your life insurance at work. Life insurance through your employer is not the same thing that I talk about. That is a paid up policy. So the employer pays for the policy for you. And then if you are to die, they'll pay out like 50,000 or whatever it is to your wife, your husband, your parents, whoever you have as the beneficiary. They'll keep the rest. So that's not what I'm talking about. That's completely separate. That's not infinite banking. I had life insurance. Can we start after 40s? Absolutely. So Mike Mac Boise, you can definitely start after in your 40s. I have clients that are in their 60s. So you can definitely do it. The only difference is your death benefit is going to be lower because you just don't have as long to live as someone who's younger. Like if you're 20 opposed to 40, you technically, if all things match up, have about 20 more years to live if you're 20 years old opposed to 40. So that means the money has longer to grow. So death benefits are higher the younger you are, and lower the older you are when you start. So you can definitely do it. Check out the link in my bio, register for that free training video. Let's see. All right, so I'm not seeing any new questions on Instagram. Ethan, you're welcome, man. Got it. All right, so this person said, how much does the average policy lose up front? For example, if I get a $200,000 policy, how much is readily available? Great question. So your policy doesn't lose money ever. That's what you have to first understand is it never loses money, but there is a cost to having the death benefit. So prime example is if you put money into a policy and you want to have super high liquidity. So if you put in, let's say $200,000 and you want the highest liquidity you can have, that means that you're going to have the lowest death benefit possible because the death benefit has a cost. It has a fee to get that death benefit. So if you want the highest liquidity, you've got to do the lowest death benefit. So for example, if you put in $200,000, you could have access to up to like 90% of it. So what would that be? $180,000 because the other 20 is going to go to fees for to pay for everyone at the insurance company, cost of insurance, but that'll never change. It'll stay exactly the same your entire life. And then your money will never stop growing. So the next year, you'll have access to even more. It'll be like 95%. The next year, you'll have access to almost 100%. Year after that, you'll have access to more than you put in. And then every single year after that, you just have access to more and more and more and more. So, first thing though, you're never losing money. You're just paying for a death benefit, and the rest of that money you're putting in, that's your cash value. You have access to that right away. How do you pay your bills with infinite banking? Probably not the greatest use of a policy to pay your bills with infinite banking, at least not right away. Because to the last question I just answered, when you put money into a policy, you don't have access to dollar for dollar what you're putting in up front because there's a cost for the death benefit. So if you're paying your bills that way, it's just not the most efficient way to use a policy. You could do it, but it's just not the most efficient way to do it. I personally wouldn't do that until you're several years into the policy, because then when you put money in, you can immediately use more than you put in. At that point, it would maybe make sense to pay your bills through policies. You basically want to get to a point where all of your bills are being paid back to your policy. So you're buying things, borrowing from your policy instead of borrowing from a bank. Perfect example, everything I purchase now, I purchase from my policy. And then I'm paying those bills. Those bills are getting paid back to my policy. So I'm just paying myself back with interest instead of paying the bank interest. So that's what you want to eventually get to is all your bills, you're paying to yourself with interest instead of paying to the bank with interest. So hopefully that makes sense. Looks like we got a couple questions on YouTube. So I'm in Asia. Where should I put my cash? Mohammed, I have no idea. I'm not in Asia. I don't know the laws out there. I don't know strategies for investing out there. I'm in Phoenix, Arizona. So I'm sorry, man, but I can't help with that. What I do is infinite banking. It's not available in Asia, unfortunately. All right. So Chandler Axel says, I left my 9 to 5 to start my business, and it took a while to get profitable. So there was a gap in receiving income. Now that my business is becoming profitable, how does the gap affect me getting a policy? Great question. It's not really going to affect you much because unless you're just doing a huge policy, because then they're really going to dig into your income. They're going to ask for tax returns and all that. When you're doing a policy, they base it off of what you say your income is. So they're going to do an application. They're going to ask you what your income is, what your net worth is, how much money you have in the bank, all that stuff to see if you can afford the policy. So really, it shouldn't affect you. If you're profitable now, that's what you'll get approved on. So you should be just fine, Chandler. I wouldn't worry about it. Drew Hitchcock says, do you have thoughts on when you should be looking at cash flowing investments versus more appreciation plays? Great question. So guys, I think cash flow is king. That's what you should really be investing for. I don't think investing for appreciation makes a lot of sense because you're basically just gambling. You want to make sure that anything you invest in has the ability to cash flow. So, prime example, I only do, as of right now in real estate, I only do Airbnb properties because they cash flow like crazy. However, when I'm underwriting that property, when I'm underwriting that real estate deal, if the property will not cash flow as a regular rental, a long-term rental, I won't do it because what if there is restrictions put on Airbnb? What if the city says that we can't do Airbnbs? If I have to go to a long-term rental and it doesn't cash flow, it doesn't make sense. So great question, Drew. In my opinion, always invest for cash flow. If you get appreciation on top of that, that's just the cherry on top. But never, again, in my opinion, never, ever invest solely off appreciation because that is when you can get into trouble. That's when people in 2008 got in trouble. They were flipping properties thinking the market was just going to keep appreciating like crazy, and the market tanked and they were screwed. Same thing with flippers recently. They're banking on all these properties appraising like crazy and the market leveled out, so all these flippers are kind of screwed because they're holding on to properties that they can't sell. So again, that's just my opinion, but you should never, ever invest based off of appreciation. Always invest based off cash flow. Chandler asked, how many policies can you have on yourself and what is the maximum dollar amount of policies you can have? Great question. So Chandler, it's all based off of your insurability. So you have to be healthy enough. If you're not healthy enough, they're not going to approve you for a policy. And then I forget the exact math, but it's based off your income, and each company is a little different. So let's say your income is $1 million a year. You'll generally get approved for about 40%. And I could be off on this. I don't deal a lot with the underwriting. I just write policies and then my back end team takes care of everything in underwriting. But I believe it's about 40% of your gross income. So if your income, just for easy math, if it's $1 million a year, you could get approved for putting in $400,000 a year into a policy. That could be one policy or that could be 30 policies. It just adds up to that number. Once you get to that number, unless you're making more money, you can't get approved for more policies because it's based off the death benefit. That's when you have to start getting policies for other people. So hopefully that answers your question there. Life 180. That's my boy, Chris Kirkpatrick. If you are not following Chris Kirkpatrick on Instagram, follow him. On YouTube, you're probably already subscribed to his channel, Life 180. Just drops so many gems. He asked, if I wanted to buy an Audi R8, What's the best way to do it? Guys, amazing. So Chris and I actually made a video about how I bought my Audi R8. In-depth video. I haven't figured out how to put it onto YouTube yet, so Chris has got to help me with that. But we recorded it, and I'm going to eventually have it up on my YouTube channel. But basically, guys, the best way to buy anything is to buy it from an overfunded life insurance policy, infinite banking. The reason why is because you're going to borrow money from your policy instead of borrowing money from the bank. If you borrow money from the bank to buy a car, you're going to pay the bank interest for owning that car. And then eventually you're going to have to buy another car. So if you borrow from the bank, you're going to pay them more interest on the second car, the third car, the fourth car. So the best way to buy cars or to buy anything is to fund a policy, basically get a pile of money in your policy in cash value, and then borrow against that. So let's just say you've got $50,000 in cash value. You want to go buy a new car. Borrow, let's say $50,000 from your policy, buy the car with that money. The $50,000 is still going to compound and grow in your policy because you're not borrowing it, you're borrowing against it. So it's just going to keep getting bigger. Bigger it gets, the more you can use it for bigger things. And then what you're going to do, buy the car cash. You own the car. You bought it with borrowed money from the insurance company. Now all you're going to do is just treat that money the exact same way as if you got a car loan. If you got a car loan, you're going to have to pay them interest every month without fail, because if you miss a payment, it messes up your credit. So just do the same thing. Take the payments that you would have paid to the bank and just pay them to your policy. So what you're doing is you're getting the interest that you would have paid to somebody else, and your $50,000 is also gaining interest tax-free. So what happens is you get all the money back for the car. You end up making money just by buying cars. So very difficult to explain that quickly, but there's a video again that Chris and I did that I will put up eventually. And call me later. I'll help you. All right. I'll call you, Chris. We'll get that figured out. So Chandler says, I have renovations to do on my primary residence. I could open a policy and use funds from that to do the renovations instead of paying for renovations using cash and never getting that money back. Yes, you are thinking the right way now. Whatever you're going to use money for, regardless of what it is, what you should do is just change one thing. Instead of using the money, first put it into a policy and then use it. Because if you buy anything, like right here, $100. If I use this $100, this is fake money though, so I can't actually use this. I'd go to jail, but it's just prop money. If I were to use this money, it's gone. I can never get it back. So the earning potential of this money is gone. $100 over my lifetime, compounding at, let's say, 4 to 6%, will turn into a lot of money. But if I spend it, it's not going to do that. So think about all the money you spend throughout your life. You're giving up that money's ability to grow. So all you got to do is just first put your money into a policy, because then it'll never stop growing. It's guaranteed to grow tax-free. So put it there first, guaranteed to grow, borrow against it, do whatever you're going to do with the money, and always have a plan to pay yourself back with interest. Because remember, if you borrow from anybody else, you're going to have to pay interest. So treat your money the exact same way. Always pay yourself back with interest, and your money will never stop gaining interest. So you're literally going to make money in multiple places at the same time. All right, what else we got? All right, so nothing on YouTube. Let's see what we got on the gram. John Arthur Lucas, what up, Jay? Man, that's like almost like my little brother, man. That's my cousin's wife's sister, and my cousin's like my brother, so it's kind of like my little brother right there. Let's see. Any other questions? So hypothetically speaking, what you're saying is instead of the bank, we should bank with stock. No, it has nothing to do with stocks, Zane. Nothing to do with stocks. It just it has everything to do with just putting your money into properly structured insurance policies. If you guys really want to understand how this works, check out the infinite banking link in my bio, and that'll go into detail about everything for you. Can I get a credit card through my policy? No, you cannot. I saw a recent quick reel on how you buy your cars. Can you explain how that's done? So I just explained that briefly. I'm a beginner. Where can I start looking for a policy? Go to the infinite banking link in my bio. Click on that, register for my free training video. At the end, you can schedule a call. Megan says, I would love to get into the private money club. Anyone who wants to get in the private money club, go ahead and shoot me a direct message, and I will send you a link so you can sign up for the private money club. In the private money club, you can lend your money out on real estate deals. Right now, I've got money lent out at 12% and 15%. So I'm making 12 to 15% on my money, but I borrow it from a policy first. So it's making money in the policy as well. I'm making money in two places at the same time. And it's backed by real estate. So great place for you to beat inflation, really, you know. And you can also, if you're a real estate investor and you're actively investing and you need to borrow money, it's where you can get private money. So you can put your real estate deals on there and get them funded. Can we start infinite banking in Africa? Unfortunately, no. Can a person with bad credit, no money, be successful in what you're doing? Absolutely. So you don't need your own money. You can borrow other people's money. Again, Private Money Club is a great place to get private money. You don't have to use your own. And when you borrow private money, there's no credit checks. Private money and hard money, no credit checks. So you definitely don't need it. With a dump into a policy, what is the cash value available with the premium? So it depends on the structure of the policy, but when you dump money in, you're going to have access to at least like 80% of what you put in. If you dump in $100,000, you'll have access to 80,000 right away. So the 100,000 is going to compound and grow tax free. Then you can take the 80,000 and go make more money with it. So if you think about it, you have $180,000 making you money, but you only put in 100. So you're multiplying money by using a policy the correct way. Ballpark number, how long does it take typically, one, to start getting the policy, and two, from getting a policy to being able to get money out? Great question. So Chandler, it takes from start to finish generally about 6 to 8 weeks from start until your policy is funded. Once it's funded, so that's when you put the money in, it takes a couple weeks to get money back on a policy loan. because the money has to clear from your bank to the insurance company to bank. And then every time after that, a couple days, you just request a policy loan, you get money directly deposited into your bank account in a couple days. So from start to finish, about 2 months. And then you can just use the policy whenever you want. And it's real quick after that, couple days. All right, guys, I have a call I have to jump on in 3 minutes. So I appreciate all of you guys for jumping on this live. I am back in town. No more vacations until December 1st. I am actually going to Barcelona, Spain with my daughter for her birthday. But until then, I am back. I'm going to be putting out a lot of content for you guys. I'm going to try to do a lot of lives and just, again, pour into you guys. Give, 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 give. One thing I've learned, which all of you guys should learn and implement, is the more you give, the more you get out of life. So a lot of us just want to take. And that's the reason a lot of us are broke and check to check and just hurting, right? Give. The more you give, you will eventually give so much that it comes overflowing back to you. And I can speak from personal experience. I used to be bankrupt. I had $300 to my name just a few years ago. So I appreciate you guys. Thank you so much. Until next time, I love you guys. Peace.